when things are not hunky-dory for India Inc., the risk that, these companies could default, considering the fact that they are AA and below, could increase. And you have a fund that does tend to obviously hold the slightly lower rated, securities. So, Mohit, should one really, in a way, look at the economic cycle or the growth cycle that the country is in right now before investing in credit risk funds? Do you think that could be a good determinant on when these kind of funds could deliver good returns?
Look, Mobina, I think in investments, one thing is very common. You have to catch the lead indicators and not the lag indicators, basically. So if you're really looking for the economy to turn rosy and all good, the returns would have already been taken off the table, right? So if some has to really take risk in the debt, and I continue to repeat that phrase, that if you have to really want to take risk in debt, because there is a good amount of risk in credit risk funds out there. There is a risk of default, there is a risk of downgrade, there is a risk of delayed payments and so on and so forth. There is a lot of liquidity risk, there is a lot of duration risk also out there. So one has to be really cognizant. But if you have to take a plunge, then today is the right time when the economic indicators are about to pick up or they have already started picking up. The yields, as I showed, the difference between the AAA and a AA paper is fairly high right now in the economy. So that is the time when you really would want to capture those yields. And the category has started seeing some flashes of new inflows of late, not very high though. The category has shrinked hugely in last 3 years, but yes, some green shoots can be seen.